Welcome back to Kitco News. I'm Jeremy Szafron. Well, markets are flashing strength, but the macro undercurrents are currently shifting. The S&P 500 just hit a new all-time high of 6185, and that's happening even as inflation reaccelerates and consumer data continues to weaken. According to the Commerce Department, U.S. personal spending declined in May for the first time this year. Meanwhile, the Fed's preferred inflation gauge, the core PCE index, rose 0.2%, breaking a three-month disinflation streak. Now, Fed Chair Jerome Powell told Congress this week inflation could rise further if tariffs continue to kick in, and traders aren't convinced. I mean, markets see still a better than 70% chance of a September rate cut, according to the CME FedWatch tool. But the bond market's pushing back. The 30-year yield is approaching 4.5%. Now, Washington is racing to finalize up to 10 trade deals before July 9th. And a U.S.-China rare earths agreement was just signed. While new pacts in India and Japan and the EU are in play, markets are rallying on the progress, but tariff threats still loom. Now, earning projections are quite soft. Bloomberg Intelligence sees Q2 of the S&P 500 growth at just 2.8%. It's the weakest in 2 years. Still, equity inflows are near record highs. Bank of America says U.S. stocks are on pace for their third largest annual inflow ever. And Bitcoin is also holding near 107,000 here. Now, ETF inflows hit 1.3 billion this week, according to CoinShares. And MicroStrategy added another 1 billion, just over $1 billion, pushing its total holdings above 226,000 BTC. So how do you allocate in this market? And where is the real upside? And what's being mispriced? Joining me now is Mark Moss. He's an entrepreneur, strategist, of course, host of the Mark Moss Show, also partner of the Bitcoin Opportunity Fund. Good to see you. Welcome, Mark.
Yeah, Jeremy, thanks so much for having me back on. Always a pleasure to see you. What a good recap you gave right there.
Yeah. Well, I have to. It almost feels like if we don't give the lay of the land, it just gets so expired so fast. And listen, I mean, we've got kind of a macro split screen as you're talking about the S&P 500 hitting that new all-time high, Bitcoin holding above 106, 107. U.S. consumer spending just declined, though, for the first time. And then we got this 30-year yield at 4.5%. I mean, what are investors misreading in this market? And if you're sitting on cash, what are you buying today?
Certainly. I think the last time we sat down with each other was at the beginning of the year in January up at the Vancouver conference. And I was on stage there and I told people, they asked sort of my 2025 outlook. And I said, I think this first quarter, Q1 of 2025, was going to be pretty rough. And I think a lot of people should be hedging their positions. And I gave a bunch of reasons as to why. But I said, I think then we resolve and we'll make new all-time highs this year. And I think that's where we're at. And ultimately, if I was going to frame this up, a lot of it comes down to the, let's call them waves, the disruption that Donald Trump has put in that first 100 days that he was in office. And so obviously saber rattling big time with the tariff threats, right? And then the media jumped on the bandwagon that, the whole world was going to end and nobody would ever trade with the United States again. And he doesn't know what he's doing and the markets are going to crash. And I think obviously the markets reacted to that, right?
Yeah.
We know from the art of the deal, his whole goal is to anchor really high and then negotiate down from that. So then the media is like, oh, he's caving. Of course he would. So I made a bunch of videos talking about the tariff specifically, but it was like, of course it was anchoring high and coming back down. Of course a deal was always going to be made. And so I think that's what we're starting to see, sort of this whipsaw. But I think there's two main things that I would see that to answer your question. So number one, why are markets going high? But also you're talking about the long-term bonds going up as well.
Yeah.
And what I would say to that is the markets are responding because, of course, of the whipsaw, right? They went down based off of the world was never going to trade with the U.S. again, and now realizing that deals with China are in place to the point that you made with the rare earths, et cetera. So now deals are coming in, and of course, the world goes on, number one. Number two, we're starting to see an end to these wars. That's also good as well. Number three, what the tariffs did do was we got, I believe, about $8 trillion of commitments to come start reinvesting and building in the United States. That's massive growth. That's like 20% of GDP. So there's a lot of long-term catalysts there. But then what about the bonds? The problem with the bonds is the world has basically woken up to the point that all the central banks of the world are going to have to continue to debase their currencies at a rapid rate. They cannot allow bonds to pay a positive real yield. It's just not going to happen. Mm-hmm. And so we're seeing this in the bond market. All the long bonds across the world are all making new all-time highs. And I believe that's what it's telling us. I think gold is also telling us that. I think Bitcoin is also telling us that.
Yeah, and I mean, you've also called this, saying that we're kind of in a regime of peak fiat, right? I mean, people are waking up to the debasement story. But how do you structure exposure now? I mean, is it outright Bitcoin? Is it hard assets? Is it kind of these equities tied to real world infrastructure?
Yeah. So the way that I look at it is not, I don't look at the CPI numbers the government puts out, CP lies, if you want to call it that, right? I'm looking at up to about 1950. The real definition of the word inflation was monetary inflation, the size of the money supply going up. And so if you look at just the US M2 from the year 2000, we were about 4.6 trillion. Today we're at 22 trillion. All right. Mm-hmm. That's almost a 500% increase. That's about 10% a year. Okay. That is the rate of monetary debasement, or what I would consider the real inflation rate. So that's my hurdle rate. I have to beat 10%. Now, if you understand that, it's not the individual prices going up, it's the rate of monetary debasement, 10%. Then I start to go, well, what asset classes are paying more than 10%? Well, there's been two assets that have beat that. One, the NASDAQ. The NASDAQ has been able to beat that. Number two, Bitcoin has been able to beat that. And those are the only two places to look. So Bitcoin and tech, basically. Yeah.
Interesting. Okay, well then when you look at, what we're talking about when it looks at Bitcoin ETFs, we've been talking about this ETF flow. I mean, it's 1.3 billion this week. The biggest since March. MicroStrategy just added another 1.5, or I think just over 1 billion, $1.05 billion to its treasury and BTC. I mean, is this still smart money entering, or are we now seeing kind of crowded risks that could flip fast if yields rise again?
Yeah, I mean, let's talk about the flows for a second. So the ETF flows, you're talking dollars. If we look in terms of Bitcoin units, right? Bitcoins, they've added about 100,000 net in the last 3 months from the March lows. So the last couple of months, right? Again, the Donald Trump slump, and now we sort of have this rebound. So about 100,000 during that time. Now we have all these Bitcoin, or these publicly traded companies that are adding Bitcoin to their treasuries, and they're now, the top ones are holding about 823,000 Bitcoin. Now, during that same time, since the ETFs launched to now, Bitcoin's gone from about 40,000 to about 110,000, or I think you said it was 106, 107,000 right now. And so we've seen the rise of the price going along with this pump, if you will. I think the question that maybe you're asking is like, how much further can it go? What are we expecting from this cycle? And what we can see is that a lot of people think that we haven't gotten the price appreciation, even though, to the point that you're making, the ETFs are having these big flows and the corporations are buying massive amounts of Bitcoin, although it did go from 40 to 110. But what we're seeing, Bitcoin is very unique compared to other financial assets. One thing that's very unique about Bitcoin is we can see on-chain data, all right? So it makes it very transparent. And so what we can see is that we can see all the wallets that are holding Bitcoins that haven't moved in a certain time frame. So we look at all the Bitcoin that have not moved in the last 1 to 5 years. We call these HODL waves, people that are holding Bitcoin for long periods of time. And people that have been holding it between 1 and 5 years are now starting to take long-term profit. So over the last 3 months, we've seen about 240,000 Bitcoin be moved from long-term wallets into the market. 240. So it's been matching, the amount of selling has been matching the inflows from the ETFs and the treasury companies. So that's sort of what's been keeping the price right here. But here's what sort of history tells us, that there's potentially a supply squeeze coming. Because what we can see, again, looking at on-chain data, is we can see the amount of selling coming from these wallets is diminishing pretty quickly right now. Based off of past instances, when we've looked through several cycles, looking at the amount of coins that have moved and the selling slowing down, we have seen Bitcoin double within months in a similar setup to this. So as long as we can see the ETF flows continuing and the treasury companies continue to acquire at about the same rate they have been, and we can see the supply is dwindling pretty quickly, I think we could see Bitcoin double from here in a few months.
Wow, interesting. Okay, because that kind of is, I mean, it's a thesis, right? We got these 4 macro signals that tend to be somewhat flashing green. You mentioned it, M2 money supply is growing again, I think up 1% year over year, the St. Louis Fed put out. Bank reserves remain above 3 trillion. I mean, that's obviously ample fuel for risk taking, right? And then the Fed just slowed its balance sheet runoff, citing that treasury reductions of 5 billion a month. And then we got this global dollar funding costs are cheap. I mean, the euro swap spread shows a 2% discount. So put it together, does this set up, what does that next leg to get us to 200? I mean, what does that look like in you? And which of the liquidity signals matter the most to you right now?
Yeah. So you mentioned a couple. So obviously you talked about the euro, the ECB, and then you kind of went back to the Fed. So the Fed has sort of been sticking. You mentioned earlier, like, is Powell, rates, is Powell going to cut rates at the next meeting? Looks like there's a good chance that he will. But we have to look beyond Powell and beyond the Fed. All right. We have to look because we're in a global market, specifically when we're looking at like something like Bitcoin, which is a global asset. It's a commodity. And so while maybe the Fed is still sort of somewhat holding on what they're doing, even though we've just seen them change the banking SLR ratio, maybe that's a form of sort of easing, for example. But at the same time, we've seen China doing massive money injections. Okay. And so we have to understand that when China inflates their monetary supply, it also comes into global assets like Bitcoin and increases that. So while the US has sort of been sticking a little bit, we can see other banks easing at the same time, which is why, again, I'm saying that most of the developed world, Australia, Canada, Europe, et cetera, we can see that long bond making new all-time highs. So what is that next wave? I think we continue to see easing happening through the rest of this year. I think we'll see the global liquidity continue to rise. Michael Howell does an amazing job sort of forecasting that or calculating that on a weekly basis. We're at about 179 trillion in total global liquidity right now. I believe that's up about 8 trillion just year to date. So that's a massive increase in global liquidity. And as long as that continues, which it looks like we're on pace to do that, then asset prices should continue going up, which will keep that long-term demand. Another thing, back to Bitcoin specifically, and here's another big catalyst for long-term demand, is we have this new phenomenon, MicroStrategy, formerly, now it's strategy. They pioneered a strategy of accumulating Bitcoin on the balance sheet by tapping public debt and equity markets. Okay, they were the first to do that, started in 2020. The model really got proven last year when a company called Metaplanet out of Japan copied that. They were the first companies to successfully copy it and perfect it, which now kind of shows the strategy can be done by other people. Right. This year to date in 2025, we've seen 20, 30 companies at least launch a similar platform. In the last maybe month and a half, we've probably had 5 or 6 companies do 500 million, 700 million. Pomp's company just raised $1 billion to create the same strategy. Mm-hmm. So we have now about half a dozen companies that have collectively raised billions of dollars to go buy billions of dollars of Bitcoin and continue to leverage the public debt and equity markets to acquire more. So that is a big catalyst. So I talked about, as long as the demand stays steady at the rate of the supply dwindling, we could double. But we're not talking about the demand staying steady. We're talking about the demand about to move up exponentially.
Yeah, this Bitcoin treasury, I mean, you and I were talking about, it's kind of the hottest game in town right now. And I want to kind of dig into a deeper fact on the institutional adoption and kind of what it really looks like, because MicroStrategy, who you're talking about, I mean, we just mentioned, is added over that $1 billion this week, pushing its total holdings to about 226,000 BTC. But it's also now facing 5 lawsuits, security fraud lawsuits from law firms, accusing it of misleading investors during Q1's Bitcoin buying spree. Now, the company racked up nearly $6 billion in unrealized losses last quarter after buying near 95,000. And the suit claims strategy overstated profitability and underplayed the risk. But Bitcoin has obviously since rebounded, and the legal cloud is still a little real here. But I guess the bigger question is, how does this kind of legal overhang reshape the risk reward for, corporate treasuries and boards considering Bitcoin exposure? Does it slow it down, or does it just force better disclosure?
I can't really speak to that. I'm not an attorney and I don't really have all the facts about that. But to answer your question, well, I want to make a couple facts. So first of all, you talked about Q1 of 2025. Mm-hmm. So right now, Q1 of 2025, MicroStrategy stock price, MSTR, to today is about flat. Mm-hmm. Year over year, so 1 year ago today, it's up about 250%. In Q4 of last year, we saw about 2 or 3 days where the price jumped and came back down. So a couple of days, if you happen to buy in that high point, you could be down a little bit. But for the most part, if you bought in Q1, you haven't lost any money. Yeah. If you bought 6 months ago or 1 year ago, you've doubled or tripled your money. But if you bought those couple days, it came down. So I don't really know. I can't really speak to this legally. But to answer your question, what does this do? Well, certainly, yes. We've seen Bitcoin move into the public equity space. The public equity space is highly regulated. And of course, it requires all types of disclosures. And so I would imagine, this might alert other companies as to what the potential risks are. We'll probably see, to your point, better disclosures and things like that. But yeah, I can't really speak to this lawsuit. I don't believe it's going to slow down this movement at all, because really this movement is much bigger than what most people think it is. And let me just kind of break this down for you for a second. What a lot of people think is going on is maybe a bubble where we have all these companies coming in and doing these leveraged Bitcoin plays. How many could the market bear? What's really going on? Or is there really any value being created? And what MicroStrategy has done is they have their stock ticker MSTR, obviously, and that is their product to the market right now, a leveraged play against Bitcoin. But they've now released 3 more products: Strike, Strive, and Stride. And what each one of those does is they represent a new type of financial product that's specifically designed, purpose-built to tap into pools of capital that are locked in the fixed income markets. So we have over $300 trillion in the fixed income markets that are trapped. And they're trapped in different funds, pension fund, hedge funds, and each one has their own mandates as to what they're allowed to invest into. Typically, they're invested into some sort of a bond that's in some sort of a CDO tranche that you don't even know what's in there. It's under collateralized and it's paying 3 to 5%. Mm-hmm. What MicroStrategy has done is taken a product to market that's over collateralized. Very easy to understand, one asset, and it pays 10%. And each one of these is tapping into a new pool of capital. And that's what Metaplanet has done. It's tapped into Japanese pools of capital. And these companies are going to continue creating these straws, if you will, tapping into each of these capital pools and allowing these investors trapped in these underperforming high-risk assets to now get a much better performing asset with much low risk. So I think there is a lot of room to run in this. We have gotten nowhere close to a bubble, and this is not just a scheme or scam to lever up Bitcoin. It's literally helping these savers trapped in these pools to get better yields.
Yeah, and even politicians are obviously watching, including the president. He made headlines today, and I saw that you were writing about it on X, my friend, but he was asked about his personal Bitcoin investments, and his response was interesting. He said, quote, "Paying for things in Bitcoin can take pressure off the dollar." Louis, play that clip if you could.
It's become amazing. I mean, it's the jobs that it produces. And I notice more and more you pay in Bitcoin. I mean, people are saying it takes a lot of pressure off the dollar. And it's a great thing for our country. So I don't care about investing. I have I have kids and they invest in different things. They do believe in it. But I'm president, and what I did do there is build an industry that's very important. And if we didn't have it, China would. Okay. Sir, Mr.
All right. Now, obviously, it's a stark shift from previous administrations, and it comes at a time when the dollar trust is increasingly in question, as we continue to cover, just here at Kitco, too. Okay, Mark, you talked about it on X. You said kind of Bitcoin's now acting like a liquidity sponge, soaking up the monetary premium that you use to inflate assets like real estates and stocks. So is this the turning point? I mean, are we watching Bitcoin become a release valve that actually helps the system stay intact rather than threaten it?
I think so. I mean, ultimately, in some far off time frame, it threatens the system. But in the shorter term, and when I say shorter term, I mean in the next couple of decades, I think it actually helps the system continue for a lot longer, and for the reasons that you've talked about. The United States, with the reserve currency, suffers under something called Triffin's dilemma. And Triffin's dilemma states that the nation that has the reserve currency is always going to be forced to hollow out its industrial base so it can send dollars offshore. And so the world needs dollars. The US has to continue to print the dollars, and that continues to inflate the system or debase the currency. Now, what that ends up with is asset prices at all-time highs. Homes are unaffordable anymore, right? How do our kids afford homes these days? How do they afford buying into stocks, into companies that are now trading like Tesla, 150 times PE, right? And so these assets are now unaffordable for these next generations because of that monetary debasement. And so I think what could happen, I think we're already starting to see this, is Bitcoin, as I said, acting as this liquidity sponge. Mm-hmm. So because it is the best performing asset, it's absorbing more of this liquidity than any other asset is. And it's sucking the monetary premium out of real estate out of companies, out of stocks, et cetera. So for example, I started my career in real estate. I used to own hundreds of rental properties. I've pretty much sold all my rental properties and moved it into Bitcoin. And I see stories on X every single day of people doing the same thing. And so that starts to bring the monetary premium down. And so what I think could happen is asset prices that we need, like houses, for example, like businesses, it could bring those down and hold them in a more reasonable range, allowing the next generation to actually own assets. And that way it allows the dollar to continue to inflate, continue to send dollars to the rest of the world as is needed, but without the massive inflation that we've been seeing. Instead, it's going to Bitcoin.
Yeah, interesting. I was going to ask you, I mean, what does it mean for monetary policy? But more importantly, I mean, generational wealth transfer, right? I mean, what about for institutions in those positions kind of going forward if this is the case, if it kind of is that sponge, that release valve?
Well, every company is going to need to adopt a Bitcoin treasury strategy. So we have some companies like Tesla, for example, that have taken some of their savings, right, their treasury, and put some of it into Bitcoin. So certainly each company is going to need to do that. They're not all going to have to be a treasury strategy company necessarily, but it is going to continue to absorb this monetary premium. Right now, we can see over the last 5 years, I believe Bitcoin's up about 85% CAGR. In the last 3 years, it's up like 65% CAGR. I think it'll continue the rest of this decade over the next 5 years at least a 50% compounded annual growth rate. And there's just no other asset touching that. And more institutions are waking up to this. And it's amazing playing back to that clip of Trump.
Yeah.
Trump was adamantly opposed to Bitcoin just a couple of years ago, as was Larry Fink, as was Jamie Dimon. But they're all starting to change their tunes. Everyone is coming around eventually, slowly but surely. And just this week, I'm sure you saw the news, we haven't touched on it yet, but just this week was that the FHA said they're going to change mortgage requirements to now consider Bitcoin as assets when they consider your home loan. I mean, it is changing very rapidly.
Let's follow up on that. I mean, I was going to ask you about how it kind of crowds out. If this is the case, does that crowd out traditional safe havens like golds or treasury, like the T-bills we were talking about? But I guess I could also kind of position it as like if a sitting president is linking Bitcoin to dollar relief, I mean, does that legitimize it as a sovereign hedge or risk politicizing Bitcoin and kind of undermining its neutrality? You know what I mean?
I don't think it undermines its neutrality at all. And I don't necessarily think that it undermines it either. And so, I think certainly we're starting to see sovereigns starting to allocate towards Bitcoin, but we're decades from where that really starts to become a bigger number. But, you talk about gold all the time, and we know that over the last couple of years, central banks have been basically net sellers of US treasuries and net buyers of gold. They've been buying more gold over the last couple of years than decades before that previously, right? And so we know that central banks diversify into other things. If they happen to put 1, 2, 3, 4, 5% into Bitcoin, it doesn't really materially change the US Treasury market necessarily. It certainly would change Bitcoin. So most people know they don't store their wealth in dollars. We store our wealth in lots of other assets. So that's why we're buying other assets. So I don't think it undermines it at all. Like I said, I think if anything, it extends the dollar's runway.
We talked a little bit about that Bitcoin cycle, the last one versus this one. In 2017, it was kind of ICOs. 2021, it was meme coins. This time, it seems like it's ETF flows, the sovereign buying, and of course, tokenization. We talked about what's structurally different about this cycle, but what keeps you cautious?
Boy, we went from having a serious headwind. Bitcoin's entire existence, and more recently, like the last 5 years, has been under massive scrutiny, and not just scrutiny, but a literal headwind. I mean, the Biden administration was openly antagonistic. Operation Choke Point 2.0. My fund, the Bitcoin Opportunity Fund, we have Bitcoin in the name, and some banks wouldn't even allow their customers to wire us funds because of that. All right. So this is the type of environment that Bitcoin has been in. In 2017, when Bitcoin ran from $1,000 to $20,000 in coordinated fashion in December of 2017, in a coordinated fashion, Facebook and Google banned all advertising. All the banks blocked transactions to exchanges. All credit cards shut off transactions simultaneously. So this is the environment that Bitcoin has grown in spite of the attacks of the government. Elizabeth Warren literally ran on a campaign called anti-crypto, okay? So Bitcoin has done that in spite of that, but now the headwinds have moved in 180-degree difference to now tailwinds, right? Now we have Trump talking about, I built the Bitcoin industry, I buy Bitcoin, right? And so what does that do? So when you ask about risks, what happens in these 50-year cycles where we see these technological revolutions that we're in right now, there's 4 distinct phases. And phase 1 is the eruption phase. So the technology was just invented and we have these early adopters playing with it. And that's the sort of the environment we've been in. Phase 2 is where the technology has sort of been adopted and now the big money comes in, institutional money. And we're in this period of Bitcoin where sort of now the big money's coming, but most of the risk is gone. At least in the United States, the political risk is gone. And if it's gone in the US, it's gone in most of the other markets. So I don't see a big risk right now in front of us. Of course, there's a couple risks that we could talk about. So certainly in this treasury company run up right now, the kind of the goal of these companies is to use leverage. And so, of course, some people will take it too far and some of those companies will collapse. Of course, that's going to happen. I just don't see a big risk overall, though.
Yeah, interesting. How much, I mean, are you paying close attention to when you're looking at sovereigns and you're looking at these other funds trying to pick up Bitcoin? It seems like it's evolved really quickly since obviously Saylor started strategy, but is it just its first innings here? I mean, are we going to see a whole bunch of these uptakes?
I think it really just started with Trump, to be honest, right? So I was in Abu Dhabi last December, and they call that the capital of capital. And I was over there with the sheiks, and Eric Trump was over there. I mean, the Trump administration had sent some people over there. And a lot of these countries were talking about these sovereign wealth funds that had been buying Bitcoin, but none of them wanted to actually make an announcement or say they had it until Trump took office and said it first. If you remember, before Trump took office, he was specifically attacking the BRICS nations. And if you remember, he put out a tweet and he talked about the BRICS nations trying to start their own currency. And he said, if they do that, they're going to face 100% sanctions. And anybody else trying to move away from the dollar, if you remember that tweet. And so you have all these other nations in the world that were sort of like dancing around the subject, waiting for Trump to come out and legitimize it, which is what happened when he took office in January. And so now it's really just to the races right now. And so each nation is now starting to scramble. Each of these sovereign wealth funds are starting to scramble, but these things take quarters. They take years to come to fruition. And so it's happening. It's happening quickly. And over the next, 6, 12 months, we're really going to start to see that pick up.
It almost feels like the president has some better advisors around him too when it comes to the crypto side. I mean, he's not just launching Trump meme coins right now, right? It feels like this is kind of monumental and it's progressing quite rapidly within his White House.
Yeah, well, you have to look at, Secretary of Commerce Howard Lutnick, and Howard Lutnick is head of Cantor Fitzgerald. And Cantor Fitzgerald, before even the administration started, had announced a $2 billion credit line that they were going to give to lending against Bitcoin. And what that does is it allows these institutions to unlock this capital, this liquidity that's stuck in Bitcoin without having to sell. So Cantor Fitzgerald was already doing that previous to the administration. They also took major stakes in both MicroStrategy as well as Tether. Now, Tether is the largest stable coin. I think it takes about 75% of the market right now. So Cantor Fitzgerald also took pieces of both of those companies. Then, of course, Howard Lutnick is part of the U.S. Trump administration right now and working on the Sovereign Wealth Fund and the Strategic Bitcoin Reserve at the same time. Now, since then, I think about a month ago probably, his son started a new spinoff, Cantor Equity Partners, partnered up with Tether and partnered up with Jack Mallers, who's the CEO of Strike. And they are now started another fund to do this. And so basically my point is we are seeing Bitcoin get heavily entrenched inside the government. And to your point that you're making, the advisors of that administration.
Yeah. And so, I mean, if hedge funds, ETFs, family offices, and now these sovereigns are all lining up, I mean, it has still not become a crowded trade, huh?
No, it's not. It's not crowded. And a lot of times what happens is we start to think, is it crowded? Bitcoin's at $100,000. Sounds really expensive because it used to be 10 cents and $10 and $1,000. And it sounds really expensive. But we need to look at, instead of the rear view mirror, we need to look at the windshield. Where are we going here? And so when we look at the asset price, there's several ways that we can start to sort of understand where it's going. One of which is looking at what is it competing against. So let's say Airbnb competed against hotels and Uber competed against taxis. This is like a venture capital lens, if you will. And Bitcoin is competing against store of value assets, where you park your wealth. Right now, again, that's bonds, 300 trillion. That's equities. That's real estate, 350 trillion. That's gold. That's collectibles. That's fine art, things like that. We have about a quadrillion, 1,000 trillion is sitting in just those store of value assets. And that's where Bitcoin's competing. The question is, what percentage of that basket could it really capture? Could it get a quarter point, 1 point, 5 points? Uber and Airbnb both captured 10% of their markets in less than a decade. I think that's reasonable for Bitcoin. The question is, at 10% of that market, what is it worth? And so the question isn't like, is it expensive compared to its past? The question is it expensive to its future? I think it's going to be $1 million in 2030. So I would say it's cheap.
Yeah, no kidding. You talked about those regulatory headwinds, and obviously they've been the biggest barrier for crypto. But this week, the Fed eliminated that reputational risk from its bank supervision rule book. I mean, let's talk about this. Break it down a little bit for the audience. I mean, they removed one of the key tools regulated used to squeeze crypto banking access, right?
Yeah. So actually, I mentioned in the previous administration, so the Biden administration was extremely hostile to Bitcoin and cryptocurrency. So under Operation Choke Point 2.0, and the Biden administration would say, oh, but there's no laws. They used other tools. So the SEC had put something together called SAB 121. Okay, it was a bulletin. It was like an advisement. It wasn't a rule, but it was like, hey, we're warning you, if you do this, we're going to come after you. So SAB 121 basically prevented banks from getting involved with Bitcoin and crypto. Now, of course, the banks want to. They see all their customers leaving their banks to go set up accounts on Coinbase or Gemini. And banking is very sticky, right? They don't want to lose a customer because you may not get them back. So the banks were trying to get this SAB 121 overturned. They started lobbying the government. It got through both the House and the Senate, and it made it all the way to Biden's desk. And somebody using his signature vetoed it. News came out this week under congressional testimony that we found out who's signing the auto pen. But anyway, I'm not getting into that. But basically, it got all the way through. The banks wanted to do it. House, Senate approved it, and then Biden vetoed it. Okay. But when Trump took office, immediately SAB 121 was repealed. Okay, that started to give the banks the now ability to get into Bitcoin. On top of that, I think was what you're saying, is now the Fed has actually come out as well and given them notice that they are able to start getting into that right now. And so I would imagine over the next 6 to 12 months, we're going to see the major commercial banks, JP Morgan, Citi, Wells Fargo, et cetera, starting to potentially offer Bitcoin right inside your account, as well as offering lending facilities against that Bitcoin as well. And that's another massive catalyst. Talk about a headwind to a tailwind.
Yeah, no kidding. Okay, before I let you go, I got to ask you about, I mean, we talked about it, but the Fed, and we know that the data doesn't really play within this asset at least too much. But if inflation ticks up and the Fed delays rate cuts into Q4, say, I mean, does Bitcoin kind of break that 120, or do we kind of get corrected before the next leg higher? You said it was 200 this year. I'm wondering if, these rate cuts get delayed and the retail market starts to get a little worried. What do you think here?
I think this is way bigger than retail. Right now, what we're seeing institutional flow. A lot of the institutional flow is not really, they're not traders, right? They're not really so worried about the specific price. I think to your point about inflation running hot and that potentially holding the Fed back, I think inflation running hot also pushes Bitcoin's price up as well. And so I would say whether the Fed cuts or not, inflation's on the table. I would agree with what you said there. And I think that continues to push Bitcoin's price up. What I'm actually looking for, the indicator that I'm watching the most, is the global liquidity. Okay, so not just what the Fed's doing, but the global liquidity. You can look at global M2. You can look at, like, say, the 4 or 5 major central banks, or some of the best global liquidity indicators. I mentioned Michael Howell earlier. Real Vision makes a good one. The Bitcoin layer makes a really good one. But I'm looking at global liquidity. And what happens is, as that money supply is increasing, assets go up along with it. And what we typically see is about somewhere between an 8 to 12 week lag or a 3-month lag. So for example, in Q4 of last year, asset prices were making new all-time highs, but global liquidity was actually trending down. So then in Q1 of this year, asset prices went down, even though global liquidity was going back up again. And then in Q2 of this year, asset prices started going back up again. Currently, global liquidity is still trending higher. Right now, it's slowing down a little bit, but it's still sustaining a high level. That's what I'm watching as the main indicator to see sort of when this bull market starts running out of steam.
All right, well said. Mark, I know I got you for 2 more minutes, man. I mean, let's just do a quick little round, one-line answers. What's the biggest opportunity? You think it's Bitcoin on corporate or and sovereign balance sheets? Which one?
The biggest opportunity to make big gains in this market right now are to buy Bitcoin treasury strategy companies. We're seeing these things going 300%, 500%, 2,000% in months. So in terms of pure gains, that's going to be the best opportunity.
One sector you wouldn't touch right now?
One sector I wouldn't touch right now would be the bond market. We know that all sovereigns are forced to print money and are going to have a negative real yield. And so I would stay away from bonds.
Speaking of those, I mean, this tokenized public market story, treasuries, et cetera, I mean, is it overhyped or real growth here?
I think it's overhyped. If you break it down, what does a token mean? Break it down to first principles. It's fractional ownership. So what if I hold it as a share, a token, it's whatever. I don't think that really adds any value to the space.
Okay, and Bitcoin's year-end target, we brought it up, but I mean, you said 200. I think you told me 150, that it would hold close to or something, maybe break out of that back in January. Still above 150, huh?
I mean, honestly, if I like to be on the conservative side, so I'm still going with like that 150 number, about a 50% increase from here. What I was saying is when we've seen a similar setup to what we're seeing right now, we have seen it double. And so based off of that, we could see above 200. I still like the 150 number, trying to be a little bit conservative there.
I like it. All right, Mark Moss, great to have you back, my friend. Thanks for joining us. And if you haven't,
If I could throw out one more thing, what I was going to say is these
course.
treasury strategy companies is something I've been talking about quite extensively. Like I said, I think it's the best opportunity for big gains in this market. I put together a cheat sheet. It's just a free walkthrough if you want. If you follow me on Instagram, just send me a DM and just say Crypto 300. I will send it to you for free. It's just a cheat sheet that you can start to understand because there's new terminology, Bitcoin per share, MNAV, days to cover, yield. And so it's the best opportunity in the space. Don't sleep on it.
All right, educational. I like it. I was going to give you a little plug, say you should go watch the Mark Moss Show on YouTube too. Great. And good insight, dude. Really appreciate making the time. Thanks, Mark.
Thanks so much. Appreciate it. See you soon. All right, that wraps it up here at Kitco News. Big thank you to Mark Moss for cutting through the noise and helping us frame what actually drives results in this market. Now, if you're serious about making smart moves, not just watching the headlines, make sure you are subscribed, hit that bell, leave a comment, and check out the links for today's guests and more of what's to come. I'm Jeremy Szafron. Thanks for watching.